Welcome to the Multifamily Investing Show, your source for market forecasting, investment, and operational strategies. Your host is Michael Becker, a principal at SPI Advisory and a Dallas-based multifamily operator who has purchased over 10,000 apartment units and manages over $1 billion in assets. Join us as Michael interviews the top players in the world of multifamily brokerage, investment, financing, and economics. And here is Michael Becker.
Welcome to the Multifamily Investing Show with Michael Becker. I'm your host, Michael Becker, back after a couple-week hiatus for a little spring break. So excited to kick the show back off. My good longtime friend, JC Castillo. So JC, how are you doing today?
Michael, thanks for having me, man. I'm excited to be here.
Yeah, I appreciate it. So JC is the founder and president of Velo Residential. It's a multifamily management firm based here, and you focus here in Dallas-Fort Worth. JC lives in San Jose. So maybe JC, give us a little background on yourself. How are you here in Dallas coming from San Jose? How did that all happen?
Yeah, well, Michael, you have sort of an unofficial title for me. You call me the unofficial representative for Texas. You know, a lot of people know me out here in Texas, and they're actually surprised to know that I don't live in Texas, but I am from San Jose. I've been in the multifamily space for about 15 years now.
Yeah.
I have bought, repositioned, and operated and property managed, thousands of units here in DFW. And so, there was really I'm excited about the opportunity to sort of introduce Velo Residential out into the general market here in DFW. And I think there's a big need for property management right now in the business.
So let's talk a little bit about that. So before you got into the multifamily space, or kind of as you got into the multifamily space, you came from the technology space, like many folks in Silicon Valley. So maybe go through your background real briefly, and how the heck did you decide to buy apartments in Dallas-Fort Worth?
Well, this is my third recession. First recession was 2001, the technology bubble burst. I was 4 or 5 years out of college and just got kicked in the butt with the recession, lost a technology job.
Sure.
And that really sort of got me thinking as to what I would do, with my, my passive income, how I could build up the passive income stream so that I didn't really have to worry if I didn't have a W-2. And so, I pretty much started buying real estate at a very early age, bought some single family homes as rentals, traded those out. And I started buying apartment properties out of state, which, back then was a big deal.
Sure.
Not as many people were doing it as they are now. But the concept was pretty simple. I was really into cash flow. Equity was a consideration, but I wanted cash flow. And so coming out here to Texas really gave me just the ideal combination of low entry point and great cash flow.
And you came here in 06, so you've been here about 15 years now, and market's completely different today than what it was in 06, right? I mean, you're buying, first couple deals you did, what kind of price per door, cap rates roughly was that?
Oh, geez, I remember first deal we bought, we paid $26,500 for a 1960s construction. We actually bought two deals. We bought a 24 unit and a 50 unit. And at the time, I thought I was paying record prices.
Probably were.
Rents were, $500 for a one bedroom and $650 for a two, and gosh almighty, I mean, if I could go back in time, I'd have bought 100,000 of those doors.
But no rent growth, no one's doing upgrades. I mean, it's a completely different market. And then you started about the peak of the market too, right? That was 2006, and you kind of managed through 2008, 9, kind of 10.
Yeah, and
started coming back out.
And Michael, it's such a great point. So that was my second recession, and that was my first one as a multifamily owner. And I learned some real valuable lessons that I really carried forward through the good times, which definitely came.
Yeah.
But for me, the bottom line is that I always tried to buy right, buy at a good entry point and buy on real numbers. And so the recession really didn't do anything to me, the financial recession, the Great Recession.
Yeah.
We were fine. We were still making our money. We had good long-term debt. And so I didn't really see any bad impacts from that. In fact, what it really taught me was that the real estate that I had bought, I had to buy more of it because it really was a very stable asset in an uncertain financial time.
So let me ask you a question. Are you interested in investing in high-quality multifamily properties with a proven and experienced operator? Michael Becker and his team at SPI Advisory have successfully purchased, repositioned, and sold thousands of apartment units with substantial profits over the years. If you would like to get notified when investment opportunities open up, please go to www.multifamilyinvestingshow.com and fill out the contact form. You will be notified when SPI Advisory has a new investment opportunity.
Speaking of uncertain financial times, we're just kind of now, we're just started in second quarter. 2021 and really about a year into this whole COVID lockdown, forced recession. It's a completely different environment than what it was, in the Great Recession in a lot of different ways. And there's some similarities as well. Maybe kind of set the scene as a guy who owns and operates and, third party manages multifamily assets in Texas. Like, what was the last 12 months environment like for you guys as a property, operator, really?
Yeah, it's so funny, Michael. The first thing I'll tell you is the more things change, the more they stay the same.
Yeah.
The pandemic certainly had some different, characteristics of the previous recession, but there was some things that were very similar. And I think if you look at what happened in the recession, the Great Recession, and what's happening now, and if you're in the property management business or if you're an apartment owner, what happens is the rent growth tails off to maybe zero or just slightly positive, but not very big, and your occupancies dip a little bit. And so what happens is your customers or your residents, they start to have a lot more options than they had before. In the good times, when you're skyrocketing at 95+% occupancy all the time and you can do no wrong, it's a little easy to forget about the customer and sort of what their choices are to live at a place or not.
Sure.
And I think that we have to go back to the basics when we have a recession. This pandemic was no different. The only thing this pandemic did was it accelerated some trends that we were already seeing and capitalizing on previous to the pandemic. But if you didn't, as a management company, set your course before the pandemic, it was really hard to adjust midstream. And so there are some real fundamental challenges that we saw. Probably the biggest one I can tell you is, the biggest thing that we saw, the challenge was, that you were not making it easy to do business with your customer. And if you weren't, that was really going to hurt you as a management company. I'll give you an example. We have a property called 2121 Apartments.
Okay.
And the property has a couple of competitors that are right down the street. We check in every week with our management our staff, on-site staff, right, at the property during the pandemic, right? And they started telling us, hey, it's the weirdest thing. The property across the street, we're getting all kinds of people coming in, and they're saying, hey, I've been trying to, get a hold of this property. I can't get anyone to answer the phone. I can't get a tour set up. And so I saw your property as it was down the street. Yours looks really nice too. Can you show me a unit? Or they'd call our property, and immediately we could schedule them with a virtual tour because we had already pivoted to that even before the pandemic. And they would do a virtual tour and they would tell us, hey, and by the way, we can't get into the property next door. So again, making it difficult or impossible to do business with your customer, whoever this guy was. And by the way, I know them. They're a huge company, got $1 billion of assets under management.
Sure.
Go figure, not set up to handle the pandemic, lost customers that we know they did that came to us because, again, they weren't making it easy to do business with their customers.
And so of the show, I've talked a lot to brokers and owners, and we always kind of talk from like the apartment owner's perspective, not so much from the management perspective, and in particular how COVID really kind of impacted a lot of that stuff. So maybe you kind of expand upon that. So, your biggest challenges that you kind of saw really coming out of the gate, at least my perception of it being the owner, like you said, how do one keep life and safety and keep everyone healthy, residents, your on-site staff, things like that. And then two, how the heck do you actually, lease units, do work orders, all that kind of stuff, and market to your prospective tenants. And then now we've come out of it, with the unknown and the fear for the first, 2 or 3 months, really, everything was really kind of tight. And then we started kind of getting back to in-person, regular business, really. Maybe talk through some of the other challenges. So besides just trying to market and attract prospective tenants and deal with that, what were some of the other challenges from a operational management standpoint you had to kind of deal with?
Well, Michael, it's such a great question, and I'm so glad we're talking about this because your pillars as an owner operator, and again, our customers, our clients are owner operators, and we know this because we've done it too. The pillars are right deal flow, raising capital. And I think the third pillar that sometimes can get forgotten in a great economy is the operations, is the third pillar. What we've really seen in the recession as a big challenge that we have been facing and that we've been addressing is the idea that your on-site staff, and you talked about it, your on-site staff are out there during the pandemic and they are literally taking it on the chin. They're out there talking to people that might have the coronavirus. And so what we learned, and we learned this before the pandemic, was that the biggest reason why your property is going to be successful as an owner is going to be whether you have a great staff, a happy staff, or if you have an upset staff and you got turnover, that's the kiss of death.
Sure.
So the biggest challenge I think that we face in this pandemic and that we've seen happen is that if you are working with a management company that is using, making your on-site staff do a bunch of back office functions that can be virtualized with artificial intelligence bots, it can be automated, or if you can also create virtual services that you do outside of the on-site world, what happens is you're creating a really stressful environment for your staff.
Yep.
And you're burning them out. And so you'll see a lot of that turnover start to happen when they're doing a lot of things besides what they really want to do, which is they want to get butts in the seats. They want to rent your units.
Yep.
And they want to make their residents happy so that they renew your leases. You as an owner, those are your two levers to maximize revenue, right? Expenses being what they are, more or less, they're kind of consistent, right? But again, what you got to do is you got to face that challenge of how do I virtualize and take away the back office functions of these staff and really focus on making them happy,
right.
Happy employees that get to do what they do best, which is build those relationships, put the butts in the seats. That is a big challenge.
And so we're seeing as an owner, kind of in Texas in particular, the two biggest line items that we have are property taxes and payroll, probably payroll, then property taxes in that order. And there's not really a whole lot you can do about property taxes besides protest it every year, but largely out of your control. So how, Velo, how are you guys kind of approaching this? 'Cause I know we've talked a lot about this. You're trying to put a little different spin on it and use some technology and try to really drive the payroll costs down by taking some of those tasks that you mentioned off the on-site staff and kind of maybe centralize it and have people that specialize in that one task and be able to do it more effectively and efficiently than someone that's trying to juggle someone coming in with a work order or an upset resident because their car got towed or whatever 1,000 things go on the properties on a daily basis. What are some of the things that you guys see as an opportunity to try to improve and enhance on that aspect?
We kind of encapsulate into one really simple sort of concept that we capitalized on at Velo Residential and that we have built successfully out, and that's called the virtual services model or the virtual services center. So the way that we approach the back office work is that we are looking to use technology and virtual humans that can be located anywhere to do a lot of the stuff that doesn't need to be done by the on-site staff. So I'll give you an example. We leverage a technology called Lisa. Lisa is an artificial intelligence bot, and Lisa will answer any incoming inbound marketing lead within 2 minutes or less.
Okay.
For either an email lead that comes from an ILS, an internet listing service, or somebody that calls into one of my properties through a Google business listing or the website. And as soon as you call in, you immediately get a message and say, hey, thanks for calling. This is Lisa. I can't talk on the phone, but I'll text you right back with more information. You hang up that phone, you got a text in your inbox, in your text on your phone.
Yep.
And it says, hi, thanks for calling Amber Creek Apartments. We've got 1-bedroom and 2-bedroom units. Would you like to schedule a tour? Michael, the reality is that people these days don't have time to wait.
Yep.
And when you wait for a lead and you call them back first thing in the morning and they called you at maybe 5:30 and you weren't in the office because you went home, your staff went home.
Yep.
You probably lost that ability to transact with that person because you didn't immediately engage.
Yep.
They were ready to buy. You need to be able to give them the opportunity to buy from you, take action immediately, and book that tour.
Yep.
So again, the virtual services center is there to not only take immediate action with your resident or your prospect and convert, but it's also there to offload. Just imagine 2/3 of your calls that come in, and believe me, your leasing agents on site are getting 10, 15, 20 calls a day.
Yep.
2/3 of that traffic is looky-loos.
Yep.
Never going to do anything to lease at your property. So the more time you have to waste your human talent in talking to those 2/3, the worse off you are.
Yep.
So what we found out is not only does this technology give us the ability to instantly connect with our buyers, our customers, but we're reducing the stress of our staff because they don't have to worry about the first piece. Once they book a tour, that's the gold.
Yeah.
Now we want to focus our efforts on hand-holding that lead from pre-tour to post-tour and say, hey, let's get you to fill out an application. What does it take to make you happy to live here? That's where you want to spend your relationship capital to convert those leads. So when I talk about, what are the things that we're doing, that's the type of things we're doing. Virtual Services Center, I'll give you another example. we've created a virtual platform of specific roles. For example, we have a virtual leasing agent. We got a virtual resident retention person that's in charge of making sure that the residents are happy and going to renew the lease with you. We start that from the day they move in. Right? We also have invoice processing that's completely centralized. We have someone that isn't the on-site staff. Again, entering invoices adds no value for an on-site manager. Doesn't add value. In fact, they normally don't enter the invoices correctly. So as an owner, you go crazy because the books aren't the way they're supposed to be. So this concept of how we approach virtualization back office functions is really making our happier employees. That's given us happier residents.
And so you're doing this in workforce housing space too, right? This isn't like a brand new high rise, like right behind you, right? You see it kind of on the screen. These are older 60s, 70s, 80s kind of vintage assets as well. So, with that said, what kind of savings, I mean, the name of the game for me as a multifamily owner is, NOI divided by cap rate. So I drive my NOI, in this environment, we're getting 20 to 1 or more in value of every dollar I'm saving or increase my NOI is 20 plus to the value with the cap rate environment that we're in. So you're able to get some pretty decent swings. What kind of efficiencies or savings are you be able to kind of generate to the bottom line on maybe like percentages or broad strokes?
Yeah. So, look, if we take a 150 unit property, right, as an example. In a traditional management scheme, you're going to have 2 people inside the office. You're going to have an on-site manager, and you're going to have a leasing agent. With our virtual services center approach, we're actually eliminating the physical leasing person that's there all the time. And we are basically putting in a multifaceted approach, a service center that's going to service not only leasing, but resident retention and invoice processing, along with an artificial intelligence bot to collect all the inbound marketing leads and take immediate action. So we're seeing anywhere from 5 to 10% savings on payroll by basically putting in and we charge on a per unit basis per month, so it's fixed cost. You get all these services, you eliminate your leasing agent, you're saving 5 to 10% on your loaded payroll on your property. But more importantly, forget about the savings. You're getting a much better quality of service, not only for your leasing, your potential prospects, but the life cycle of your resident. Because let's face it, most apartment owners and management companies are focused on putting the butt in the seat. But when you give that resident the keys and they move in, your job starts from that exact moment till the year of their renewal. Your job is to get them to sign the second year. That's where people don't remember that's the bigger part of your battle. Because when that person leaves after 1 year, you're going to spend thousands of dollars in turn costs, thousands of dollars in vacant time and getting your maintenance guys to have to go do an extra turn. This is where you really start to see the benefits of a virtual services approach that makes a lot of sense.
And so as you're adopting all these, you kind of rolling this out across the platform that you currently have today. Is there anything else that you're kind of seeing that has been able to be improved upon or get more efficiencies besides, obviously the payroll savings like we talked about, the renewal retention, any other things that you guys are kind of focused on using your platform, your technology to try to help improve overall operations and financial performance?
We try to keep it really simple, Michael. We try to really focus on the problems that our owners and clients are out there that they're facing. And one of the other problems that we found out by talking with our clients, and again, we also are owner operators too. We've been doing this for 15 years, so we also know the pain points it's the data. It's the access to the data, the KPIs or the key performance indicators that can quickly tell you by property what's going on. And the data can give you the ability to make intelligent decisions and quickly pivot. I'll give you a perfect example. When we implemented Lisa is our AI bot, right? She automatically tracks every single guest card for every single person that contacts us, and she buckets them into a lead source, right? Well, before Lisa, without that data, we really didn't have a great idea on where our traffic was truly converting and coming from, right? Post Lisa, once we started looking at the data, we figured out through the data that the number one source of traffic for our properties was a free Google business listing. Number one source. The number 2 source for converting leads at our properties on average is our websites. But if you look at the website traffic data, where are majority of the website visits coming from? Back to the free Google business listing. So on average, again, 35 to 40%, if not 50% for some of our properties, of our converting leads are coming from a free Google business listing. The power of that data told us one most important thing. For almost all of our properties, we don't spend a dime of paid advertising with things like apartments.com because we realize that we don't need it.
Yeah.
What's really important in today's environment with the data and knowing the data and seeing, we study the data a lot.
Yeah.
Your online reviews at places like Google Business are the most important thing that you need to focus on as an owner, because your prospects, I guarantee you, are looking at those reviews. They're reading them down the line. When they Google your property, first thing they do is they go, what's the star rating?
Sure.
And how many stars do they have? Across our portfolio, 4 stars and above, no joke, because we focus on it. 100 reviews normally we get for our properties, right? Takes time, but we focus on it. And our clients see the benefits because the prospects are comparing your property to your competitors down the street. And they're going to go, either they're going to go, I would love to live here. This is my kind of place. I see everybody's talking good stuff about it. Or they're going to say, you know what? I'm so glad I didn't even decide to call these guys because they've already decided and won't even give you a first chance that you're not the right fit. And so knowing the data, I can promise you this, if you're an owner out there, and if you're working with a property management company and they are not focusing on reviews every week, it's going to bite you.
Yeah, what's measured is treasured, right? So what you focus on is kind of what you get results in, for sure. So we talked about some payroll expense savings. We've talked about efficiencies in processing invoices, focusing on the data and driving to really uncovering what's actually working, because a lot of times you're just spending marketing dollars, and if you don't really know exactly, I'm just be needlessly spending thousands and thousands of dollars a year on something that I'm getting one lease for, and I could redirect those dollars elsewhere. I talked about kind of the evolution of COVID. What's kind of different today versus say maybe a year ago, and how you interact with the clients, your client facing, from property owner like me to property manager like you. So anything evolved over the last several years, and how those communications have changed?
Yeah, it's funny, we'll go back to the original theme of, the more things change, the more they stay the same, right? So if we think about the last decade of multifamily, starting after the 2008 recession, for the most part, it was kind of the golden age. The 2010s were sort of the golden age of multifamily. It was kind of a flip for equity type of an environment, right? So whether you were a good operator or a bad operator, whether you knew what you were doing or you didn't, whether you just got into the business or you were there for a long time, if you bought a deal in 2013,
you made money.
I don't care what you did. You look like a genius in 5 years from now.
That's right, yeah.
And the reality is that we've turned the corner. I started to feel it in 2019, and I didn't even know the pandemic was going to come, but I started to feel it. And really what I like to say is this decade is going to be about operating for profit. Last decade was flipping for equity. This decade is operating for profit. And so if you ask me what's changing now, what's changing is if you are not focused on becoming a best-in-class operator, then you absolutely are going to struggle this decade. You are not going to be able to just simply buy a multifamily property at whatever price point you want and sit on that asset and sell it in 3 to 5 years and double and triple your equity. It's just not going to happen. And so if you're not working to partner with the right management company, and you're not working to have best-in-class asset management, you're really going to struggle this decade. And so that is my message to any owners out there, is please do focus on operations. This is going to be really, really important going forward.
From a property management perspective, looking at the environment, like I said, we're in the beginning of Q2 2021, and it's a heck of a lot better than I think we all kind of feared maybe about a year ago where we'd be sitting, and collections have pretty much held up. And our portfolio, in Dallas-Fort Worth and Austin is where we focus. I mean, I'm seeing 5-6% rent growth for 2021. I mean, that's kind of my crystal ball where I think we're shaking out after being, stuck in the mud for basically the better part of 9 months. We're starting to see rent growth return. Occupancies are full, and I think that's kind of across the board. What's the biggest risk you see right now from property management perspective on kind of where we sit in the marketplace? What, not you necessarily losing sleep, but if you were losing sleep over something, what are you kind of most focused on to mitigate some risk right now?
You know, every day that I wake up, I try to remember one important thing, and I think the risk is that it is really hard to find great talent right now in the industry. We don't, the pandemic has come and gone, and one thing
Right.
hasn't changed. If you can find amazing talent at a property management company, you got to hold on to them, because they are going to make your owners a lot of money.
Yep.
And so I think one of the biggest risks that I think people don't realize is that it's harder than ever to find great talent to fill those on-site staff slots,
Yep.
to fill those corporate slots. And so if you as a management company are not waking up every day and going, how can I make my employees more happy? How can I take away the back office functions? How can I automate things? How can I let them do what they love to do? Then you're going to have turnover.
Yep.
And when you have turnover, you're going to have disappointed owners, because they're not going to have that momentum that you need with your staff to keep, these properties, they take 6 months to a year to really, for the traction, for the staff to gel.
Yep.
And for them to get to know the residents, and for things to take off. Without fail, I see it 1 year's time.
Yeah.
If you're not, as an owner, operator, as a management company, focusing on making your staff happy so that you can make your residents happy, that, my friend, I think is a big risk point here. And it's an unknown risk. It's people don't really pay attention to it. But I agree with you that in general, if you've got the right team in place, I think I see things starting to recover here. I do see things getting better. And, and I think with the stimulus that's being pumped into the economy, with a lot of the things that are happening out there, and being in a great state of Texas where we have a really fair setup tenant-landlord relationship-wise, I think that the biggest thing is, can you continue to find that amazing talent to keep driving the success of your properties forward?
And conversely, is there any sort of specific opportunity or something that you're excited about that you think you're able to take advantage of right now as we're, second quarter 2021?
Yeah, I think the advantage or the exciting thing is that what the pandemic has really done is it's accelerated a lot of the amazing technologies and innovative approaches to management that were beginning to take hold before the pandemic, but now have become mainstream. For example, virtual tours and self-guided tours, paperless applications. These were things that the innovators were doing before the pandemic, but now these are sort of table stakes.
Yeah.
So it's really exciting to me as you sort of look forward into the future and you go, okay, we've done this with virtual leasing. Now, where can we take it with work orders and servicing and things, and how can we make it easier for the customer's experience, the resident living at your property? They should be able to, and we can do this, by the way, if they've got a work order, they should be able to take a picture of that toilet bowl that has a busted flapper, send it to text it from their iPhone, and it automatically gets entered into your work order system. And the work order gets fulfilled. The maintenance guy gets a text on his phone, walks over, if he's got time, starts talking to the person, fixes it then and there. I mean, Michael, can you imagine how happy that person's going to be?
Right.
This is where we need to continue to drive to in order to really get that customer experience there, because that is going to get you to operate for more profit. That's what we need to be working on.
And so maybe the opportunity is, from the ownership perspective, is finding some of these properties that have antiquated systems in place that, put their head in the sand 4 or 5 years ago, and now with the new technology and the better oversight and management can really drive operational performance, drive your NOI line. I remember when we were first buying deals, we bought 2 deals. I think literally they had a typewriter in the office, and I was like, as soon as I left there, I was like, we got to buy this deal. It's that typewriter. So maybe what the modern day version of that is I guess what we should be looking for, without the virtual leasing, without the online work orders, kind of old school paper application. That's probably the modern day typewriter version of that. It's been a really good industry for me and you. I know you kind of came a little bit different path than a lot of people that break this industry, coming from the technology field into the ownership. But if you're talking to somebody that's kind of coming out of college, trying to break into our industry, any sort of advice you might have for someone that's really trying to get into the business?
Yeah, my advice is always really consistent, and that is that, it's like anything else you do in life, your reputation always precedes you.
Yeah.
Right. And so if you're just getting in, your most important task should be to really just focus on building good, solid relationships with a few key people that you really admire and respect in the industry, and just start to learn and listen. Listen to them, have them tell you stories about what they did to get where they're at, and try to replicate it in some form or fashion. Maybe you can try to put your own twist on it, that's okay. But just like everybody else, when I was getting started in multifamily, I was shadowing people that were doing stuff out here in Dallas. When I was in San Jose, I would literally say, hey, just let me, I'll jump on a plane. You just tell me when you're going. I'll jump on a plane. I won't even get in your way, but just let me like drive around with you and just let me follow you and just talk with, and just learn. And, you know, my advice to people coming out is that's how you really start to develop the understanding of how to make this business work.
And I know that Velo has got a great website, and you guys got a lot of resources on there. Maybe talk through that a little bit. I know you have a couple free giveaways on the website. People want to learn a little bit more about what you guys do. Maybe talk through Velo and his website and kind of what you guys really are focused on now.
Yeah, you know, Velo Residential, it's so fun, you know, and there's a lot of work to get a lot of the stuff done for the company launch. But you know, the biggest thing is that if we have created a resources page, a blog page where people can go and they can get information. We've got a great podcast. It's called the Operate for Profit Podcast. You go to operateforprofitpodcast.com. We got great interviews. I host a podcast with a good buddy named Paul Peebles, who Michael, you also know. So you can go there. If you're interested in hiring a property management company in Dallas-Fort Worth that has all the attributes I talked about, you know, virtualization of the services and really a modern management experience for the renters. If you're interested in hiring Velo Residential, you can go to operateforprofit.com. Again, operateforprofit.com. That'll take you to our website, and you can learn all there is to know about how we're going to help you make more money with less stress as an owner. And believe me, as an owner, I can understand that's what it's all about when you work with a management company. Hey, can you make my life easier? And can you make my property profitable? And that's what it's all about.
Yeah, and I know JC for, God, what, 13 years, 12, 13 years at this point. I made one of loans on some of your first properties back when I was a banker, and, you know, certainly see you grow throughout the years, and, you know, certainly, you know, appreciate you coming on. So if anyone's interested in learning more about Velo, I really think of JC as kind of like a thought leader in the space, especially when it comes from integrating technologies and efficiencies from what he's learned from over the years, and how do we, you know, continually improve his trade, which is property management and efficient operations. Really, JC's a student of that craft for sure. Certainly would highly recommend reaching out to JC, going to the website. So JC, if people want to find out more information, again, what was the website? What's the best way to get a little bit more information about you?
Yeah, we make it really simple. You go to operateforprofit.com. That'll take you right to our website, and you can literally schedule a free consultation with our company. We'll talk to you about what you're trying to do with your property, whether you're just wanting to acquire a property or whether you've already got a portfolio that's in existence here in Dallas-Fort Worth. We'll talk to you about what you want to do. We will, you know, collect the financials. We'll give you a business proposal, underwrite our numbers on it, give you a business proposal, and then 1, 2, 3, simple as that. You can actually start working with our company, and we can start helping you out.
Yep. So for JC Castillo, I'm Michael Becker. I appreciate you guys watching. We'll see you soon.
Follow the Multifamily Investing Show on Facebook, YouTube, LinkedIn, and your other favorite podcast platforms. To learn more information about investing with Michael, please go to www.multifamilyinvestingshow.com.